All right. All right. Zoom, sorry. You should be able to see my screen and hear me. I gotta go unmute myself on Discord. Boom. Okay. Yes. We are up and running. Screen should be shared. Both platforms should be hearing me okay. Let's get going. Welcome to the Market Watch Group midweek check-in. A lot of things going on. This market seems to be trying to figure some things out, and we're all here to talk about it, figure it out amongst ourselves. So let's get started. Here's the disclaimers. As always, we are not advisors nor brokers. We don't give guidance nor advice. This is for educational and illustrative purposes only, yada, yada, yada. Okay, today's agenda. I put a trade alert out today that was derived from yesterday's options foundations, a calendar spread. If you're interested in trying those out, that's just a nice little short-term calendar spread. Waiting for the fill. Love it. Love it. Okay. That came both via email and via Discord. Those will continue to come both ways. In fact, we're actually turning text on for that too. So if you have seen it, there's been opt-in requests, I believe. You have to opt in for the text. We can't just send it to you. But I believe maybe even this weekend, I'm going to try to get that all going so that when we send the alerts, those come with texts. Okay, so today we're going to go through today's opening analysis. We'll revisit our posture. I think we're right on point. We said, hey, very much it could bounce from here. It is great. Problem is, if this bounce doesn't last long, it puts us in that area where we're like, is this where that double dip starts potentially? So that's one of the things about that calendar spread. It's adaptable. The market goes up, I can adjust it up. If it goes down, it'll sustain itself and I can adjust it down. And if the market goes sideways, which I am inclined to think there's a good probability for, as we approach sell in May and go away time. Yeah. Oh, mindset for open trades. Now, if you held on to some bullish things, okay, great. If you added some, I hope you did it in financials at least, because there's definitely been some strength there. We saw it the whole time. Okay. We will go through the shopping list. We'll look at any setups that may still exist. And then trading plan progress. Okay, it's Thursday. Today I'm going to go post. Here's the challenge for this week, because I think these are the areas that really help us the most. Number one, weaknesses. Weaknesses. I'm going to put up 2 weaknesses. This is the challenge, to share 2 weaknesses that you have identified of yourself. So we're gonna turn this into a support group. And your mission statements. That's what we're going to share. Everyone, I mean, strengths, great. Weaknesses are the things that we're really trying to improve. So I want to put a couple. The 2 weaknesses that you're pinpointing for the goals aspect later in a few weeks, more than a few, but so that's it. Weaknesses, mission statement. I'm going to post mine. I hope you'll be willing to share yours or comment. Let's get some interaction midweek where we're working together on the trading plans. Okay, let's go. Let's go see what's cracking. I think this is what I wanted. Let's move this over. Definitely a good day yesterday. What's our follow through? Tesla soars as Wall Street cheers gold to make cheaper cars. That's assuming that they can, right? That's a big assumption. But okay. Futures up 0.06 on the S&P, down 0.12 on the Dow, up 0.5% on the Nasdaq. Certainly Tesla helping there. The Russell is down 0.4. Oil is down 0.5% at 82. We like to see that. Gold is down marginally. Boeing beats on earnings after a tumultuous quarter. I told you that they can come back. Let's see if the market's responding. Yeah, they're jumping. They were sideways, 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 and they're going to jump up to about 177. So a little gap up, right? Little gap up. What else? A new law could ban TikTok in 2025. Interesting. What's the my kids are on TikTok, you know? Interesting. Yeah, I guess I haven't looked much into that. That seems like an overreach, right? To me, banning something. How to handle savings when inflation is high. Inflation is not really high. The US economy showed signs of a wobble in April. What was the wobble? Flash composite PMI. Oh, let's look at the calendar. So let's reload this thing up. And yeah, okay. So that's what they're talking about right here. 52 dropped to 50.9, 52 dropped to 49.9. Expecting it to tick up and we ticked down. Oh, interesting. Okay. New home sales came in stronger than expected, so interesting. I don't know that the market's responding to that necessarily. Oh, look at that. The ARMs adjustable rate mortgages surge in popularity with the 30-year back above 7%. Yeah. That's crazy. Interesting. It's the only way to get in for some people, right? What do we still have left? We have some durable goods orders. We have GDP. We have jobless claims. And then obviously on Fridays, the big news is PCE. The Fed's favorite. Yeah, the Fed's favorite. The expectations are upticks on one, downtick on core. So 2.8 to 2.7 on core, 2.5 to 2.6 on year over year. Yeah, look, the Fed, this actually came from our favorite Fed, the magnificent Sir Arthur Goolsbee. Goolsby. Do you think everyone just calls him Goolsby? I'm fascinated by him. Okay, there's our opening bell. We'll watch that as it comes in. But what Goolsby said was it's stalled. One month where it ticks up and you're like, yeah, okay. 3 months and you're like, we're stalled. So until we start to see some sort of indication, it's hard for us to have much by way of expectations that this thing is not gonna budge by the Fed until September. If you look here, obviously May nothing, and we're coming up. Where's my economic? That's next week, I believe, isn't it? So Wednesday, May 1st, we're there. All of a sudden, bam, we're at the FOMC decision. Jer Bear will give us a press conference. No expectation, obviously. June, 6 weeks later, 85.15. So again, this is beyond even where there's like some sort of a hope that there's a surprise. July. You can see it continues to get worse and worse. This is the worst it's been. July, there's this like maybe if we see data come around, there could be, but there's almost 2-to-1 expectations against a cut, even in July. So oh, okay. Very nice. Got a fill on that. If you want to see what it looks like, because I don't know how well the order create duplicate order. It'll look like this. It was 91, right? I think is what it was said. So 91 cents. It is buy the May 17 505s, sell the May 10 505s at 91. I'm gonna move this over. Okay. Okay. Hey, Michael, sorry, I didn't even see you say hello. Good to see you. I'm trying to make sure that I still keep we're those of you on Zoom, let me know. Is there any challenges preventing us from trying to make a Zoom to Discord transition starting on Sunday? I don't want to rush you. Let me know if you feel like those of you who are still Zooming. What do we need to do to get you Discording instead of Zooming? Discording is exciting and new and shiny. Okay, love it. It may not be because I have to figure out what am I going to do to record these things because Discord doesn't record, and I do need to have an archive. So, okay, here it is, and it's only 1.5 to 1 in September. It's not like this foregone, like, well, if it gets to September, we'll definitely get a rate cut then. It's like, shit, we're 1.5 to 1 that we get a cut in September. What's the probability in November? You can see even out to November, there's a 23% chance of no change. Right? There are definitely more people. I mocked it at first. I'm like, they may not cut it in 2024, please. Please. And then now what? Now it's like, huh? Well, I guess the possibility exists that they don't. Interesting stuff. Let's look at the market. Let's look what's going on. Boeing with their little gap up. Here's the market. Okay, so we said, yeah, look, we're down here. There's definitely a chance that we can catch a little bounce. The size of the bounce is the question, though. And as we hit the 50, anywhere from, I'm going from the bottom of like this red candle here, where it's like we tried to bounce off of that, and then we smashed through that point. So that red candle there, somewhere around 513 versus where we are now. Anywhere in this range, if we pop up into this range, I guess I could still draw. Let me get a drawing tool here. So let's draw this line across. Here we are at the 50. If we pop up into this area and then we stall out, we can't get any higher. Obviously that's lower high. And if this thing turns over and confirms, I think that's problematic. I think that's real problematic. Anything bullishly that's new. Now, if it's your longer term trades, well, there may be nothing that you do with those. Anything that's new bullishly, yeah, I mean, look, be ready to be done with them. We're less bullish. Let's take a look at what's happened this. So if you look at our posture and we look at everything that's going on here, we've dropped 3 straight weeks. We're down from a 6.75 to a 3.5. That's barely hanging on. Just if it much further, it drops us to neutral anyways. But what do we see here? Well, today's Tuesday. No, today's only Tuesday. It's not. What day is today? Today's Wednesday. Today's Wednesday. We've had 2 days, neither of which had volume, neither of which broke new highs. So nothing is going to change in our first 3 components, at least as of yet. Those are going to stay the same. Major market, I can't imagine that reversing this week. The biggest question is, do we see these things even stabilize? I would say yes to most of these. So what's the concern then? Well, here's the concern. The concern is that with what we've seen in our posture, I now am more inclined to think that what we're seeing is oriented more towards a correction than stabilizing at a consolidation. When you look at what the Fed is doing, when you look at what's going on with the inflation, when you look at the summer months and the cyclical nature of the summer, yeah, I think we could have rough couple of months. Once the Fed's back in our favor again, we know the old saying, don't fight the Fed. What's the Fed doing right now? Nothing. Oh, Fed's cutting rates. Market likes that. So we may see that stall until we get closer to when probabilities shift more in favor of the cuts actually coming. Okay. Well, what else do we want to look at then? Obviously, we need to look at the VIX. Let's take a peek. That's now remember, I wish they would fix it. It's so annoying when it's wrong. So I'm going to just take care of it myself and remind you that that didn't happen. That's what it should look like. Now, with that in mind, is that phenomenally better or just like better? It's better. Right? We didn't get above that. What is it doing? It's disappearing. I don't like the disappearing. Didn't get above that. But this is our last low. So once again, if this is where the stall comes in, this becomes a higher low. We are sub 16 right now. We are sub 16. So those puts that we tend to take a peek at. Let's go look at SPY singles. May 31st. And what strike price are we thinking here? $507. 507 times 0.95. 42s, maybe. Okay, so let's pull those up. I mean, they're still $2 though, right? They're only $1.40, $1.50 when the vol is down at 12 or 13%. But when the vol gets up to the 20s, these things are $3, $3.50 at least. And if the market drops further, they can do very well. So I'm definitely thinking about a new hedge, particularly if I end up with any more bullishness going on. Okay. A cost of 141 for the let me this is what it should look like right here, Stephen, if that's what you're looking at. If you see here, you're buying the May. Now these are puts, right? Buying the May 505 put. That's a May 17. Selling the May 10 505 put. Debit should be 89 cents. So that's what you should be seeing right here. Make sure you've got puts. Make sure you've got 505. You're buying the 57 the May 17s, you're selling the May 10s. Okay, let's get some charts. Let's see what's going on here. Let's get rid of my drawing tools. Boop. Clear. Okay, so the market's moving up. Great. Our concern is what happens if this thing slows down. Right? That is our concern right there. What happens if this thing just can't keep going? Now, if it gets all the way back up here towards 520, that's a V. Right? That's a V. That's like oh yeah, we're done here, it seems. Boom, boom. If we get all the way back up here, then number one, we're back above the 50. Number two, we had a V bottom. I would change a lot of things in that situation. I'll be like, oh my goodness, I was not expecting that. But in the meantime, we're just going to watch it. See, we've eased up, taking our foot off the gas. Are we pumping the brakes? Nah, we don't need to pump the brakes yet. We're just still kind of watching and seeing what's developing. Okay, so what trades are working? What are you doing with them? Nope, I don't want this. Let me actually pull up this. So yeah, I mean, I gotta tell you, like, when I see this recovery here, this looks like a bear flag. That looks concerning that it might drop the other way. Earnings are coming up here soon, but we said to ourselves, when it did this move over here, we're like, maybe if it can get a higher low, but it didn't. Then it did it again, and it's maybe, and then it didn't. So it's just every time it tries, it sputters. And now here we are at lower lows. And the buyers are really struggling to make this thing move at all. Let's keep going. AIG, you can see AIG is sputtering. They broke the 50, they're trying to move, and now they're just not getting as high. Concerning. AMD is at lower lows. So some of these that were, right, if you're going to go speculatively bearish, what are we going to be looking for? We're going to be looking for who's, in that regard, we're probably going to look at the 66-day and the 22-day in our sector rotation to ask ourselves, where is money flowing out the fastest? And most likely we're going to see it in technology, maybe consumer discretionary. Healthcare has been a little bit that way, but right, that's what we're looking for. Energy still strong. Materials is iffy, but it's not weak. Same with consumer staples. Industrials is still strong. Financials is still strong. Energy is strong. Communication services still strong. Amazon looks okay. It's bouncing. This to me looks viable. You don't have a lot of time before earnings. Your implied volatility is high, but that looks viable for a bullish trade. I would have said it's viable as of yesterday, in fact. Okay, let's keep going. AXP. Beautiful. It's at new highs. Looks very strong. Boeing. Ooh, look how fast Boeing's giving all that back. BAC, very strong. Now, some of these trades, you're probably on day 4, possibly 5 on some of these. Bank of America strong, Caterpillar strong. Excuse me, not Caterpillar. Citigroup. Caterpillar is strong, but it's got earnings tomorrow before market. So I was definitely looking at this one. It's interesting. Chipotle, same kind of a thing. Still looks bullish, still setting up, but here's Capital One. So here's a problem is that yes, that the financials have done well, but they look like they're close to resistance, right? Earnings coming up on this one. Oil. Oil's in a bit of a stall right now. It's in a little bit of a stall. Costco sideways. Delta still looks bullish. It sort of moved its way out of that. Here's the diamonds. The Dow looks like it's kind of bumping its head under the 50. Bitcoin looks like it's at a lower high and stalling out a little bit. The money seems to be drying up in its flow right now. How are your trades doing that you're holding on to? Gold still looks kind of bullish to me. It's pulled back from the high, but it's still higher highs and higher lows. Is silver the same way? I got to tell my kids that the value, oh, look at that. The value of their silver bars. I got it sometime. I know it was on a dip. I think I got it in November down here around 20. Be like, your Christmas presents have appreciated by 20%. You're welcome. Ooh. Nice, Steven. COF trade has a $800 profit. Very nice, very nice. Oh, where's my list? Here's the deal. If nothing else, we should be at least well protected. We have a sense of what's going on. Small caps trying, but I got to tell you, I think small caps are going to have a hard time getting back through that 50. Let's take our way back machine. Not way back, but just a little way back. And if you look, this is kind of our correlation back here in this late July to August. At first time it breaks through, and then it like comes back and see this time. This is 2-3 days later when it gets a little higher and it can't get much further. Oh, look at the doom that came with that. Boom, 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 boom. And then it flagged a little bit, fell, flagged a little bit, fell. Then finally over here is where we got a higher low and we got back above the 50. And we're like, okay, we can do this again. But yeah, this is concerning. I think we are very much seeing that same, look how quickly, man, 2 weeks, 2 weeks, and look at us. We're not bearish. I'm not bearish, but I am definitely saying, look, I think that there's been a shift, especially as we move into the cyclicals. Okay, Meta. How did we do? It's today, right? Oh, it's aftermarket. Okay. Come on, Meta. You can do it. You can hold the 50. Microsoft back under the 50. It's having a hard time. We'll see what happens. Earnings are tomorrow aftermarket. Micron trying to bounce. I see now. I got to tell you what. Micron bouncing after this looked like a little bit of a unwarranted shark frenzy. Right. This looks to me like this stock is a $90 stock, not a $130 stock. So this looks like if this were to kind of just like roll over and flag down, oh, right. Look, I see it. I'm not, you know, I see some things speculatively. We'll talk about these on Sunday as we see that kind of thing happening, right? Netflix looks concerning, doesn't it? A little dead cat bounce. It drops hard, it starts to bounce, and then we have a bit of a dead cat bounce. Nvidia. I gotta tell you, Nvidia too. It's hard to want to bet against them, but what shark frenzies up tends to shark frenzy back down, right? Is Nvidia really more of a $600 stock? Hard to say, right? Hard to say. Where's my watch list? Sorry, lost it. There it is. Car. Yeah, another one. There's a lot of these concerning ones. This one has earnings though coming up not too long. The Qs broke down hard, coming back underneath it, and we're a little bit concerned here. First time it broke down back in August, it got back above it, but then it what? Fell. Got back above it and then it fell. Never got that bad though. SPY holding up, but I got to tell you, if it doesn't start to see that surge, this thing could start to topple. Taiwan Semiconductor, another chip stock. I think the chips. What are you guys' thoughts? If we get to a point where we're like, yeah, this thing's correcting, I think that the technology and led by chips is going to be it's going to correct first. Where are their profits to be taken? That's a question. We'll see. Maybe we'll end up doing a little piece. Here's the VIX. You can see the VIX is stalled out. It's back under 16, but it looks like it's in escalation mode, right? Still. So we have to be very careful about that. Waste Management tried to get its signal, started to move. Now it's running into earnings. We'll see what happens there. Walmart, sideways. Here we are at the XLs, XLB materials. Love it. Love to see those back down. That's helpful. Communication services holding. Like to see that hold up. Energy. Energy's getting the bounce, but the question is it going to bounce from here? So did anyone put new oil or energy trades on? I would expect maybe so. Financials look strong, but starting to ease up. Industrial still looks strong. Technology looks less so. Staples less so. Utilities, a little bit of possible defensiveness coming in that way. XLV healthcare is looking a little weak under the 50, as is consumer discretionary. All right, well that's where we are, right? Trading activity levels probably lower, risk levels down a little bit. We've got to see some things now. Look, as an options trader, this is where things like calendars and butterflies can help us to, keep doing something, keep working, not to put ourselves at risk, see the market with objectivity. That's all we can do right now, right? You can't force this thing to produce profits. The blade of grass exerting its will on the lawnmower is quite a ridiculous concept, right? So what do we know? We know the lawnmower is right over top of us. Be careful. It's a more dangerous time than it has been. So what do? We manage our risk. We think about hedging. We think about trades that can sustain, and we make the adjustment. Yeah, we'll be just fine, right? Duck, yeah. Okay. Well, let's get some collaboration here as we get nearer midweek. As well, we're at midweek, but as we near the end of the week, let's not let our opportunity to continue working on our trading plans escape. This is when I coach one-on-one, anytime we hit rough market patches, this was exactly what we would do. Let's foxhole up, make sure that we're protected. Let's work on what led us here, observations. Let's connect some dots. Let's make sure that the trading plan is good, that when things recover, we know exactly how we're going to take advantage of it. That's it. It's onward and upward for us. So yeah, if we're going to be locked in for a couple months, let's be ready for it. Let's get some work done. Questions, comments, concerns? Press said, I'm concerned that we cannot record sessions. Yes. So what's going to happen is when I'm done with Zoom, I actually have a separate piece of streaming software that I'm going to use called OBS Studio. And we might actually, well, we'll see. But that's going to be the record. I'm going to be able to record with that, then post to YouTube. So if you can't make it, you're right. Discord does not have a record feature, but I do have the ability to just kind of grab the recording and then post it. And then post it onto YouTube. So everything will still be recorded. Everything will be recorded. Everything will be posted. I think I can even have it where I just connect the stream, and then when I'm done, it just automatically loads it. So I don't have to go through this whole process of, manually posting it, which is what I have to do now. It's kind of a pain in the ass. So yeah, I'm with you. I have to have, I want everything recorded and archived, man, for sure. Yeah. Good. What other questions or comments? We're all feeling all right. I mean, look, we don't love the conditions for sure, but are we going to be able to get through it easier than most? I would say yes. I would say yes. Okay, those of you still on Zoom, I'm going to send it again. All you have to do is, basically I send out the instructions. I'm actually going to put together like a video walking through it because we just want to make sure. Those of you who are on Discord, is it easier not having to deal with links and Zoom and schedules? Is it easier to just pop in? It feels like it would be. Yes. Okay. Yeah. Yeah. And there's like every day I'll go in and I'll Google like how can I leverage my Discord better? And I'll see like ideas and I'm like, oh my God, I didn't know I could do that. So we're scratching the surface. Um, so yeah. All right. Well, listen, everybody. It's good to see you all. What do we have going on? So last night we tried to talk about butterflies, but interestingly enough, when we had that, let me pull this up. This was interesting because I'm like, oh yeah, we'll have a great discussion on butterflies. But the problem was that the VIX had dropped so much just in these 2 days that the butterflies looked not as good. They look good up here. They're higher volatility. Down here, we realized, that the calendar made more sense with that volatility bleed off. So I'll put a link. I'll put a link in the chat, in the Discord chat for that, Stephen. All right, everybody. What do we have coming up? This afternoon is a meetup, but it's you're on your own. If you guys show up and have a meeting, awesome. I hope you do. It's scheduled. It's going to be in the let's go to the events. We're in the midweek check-in now. It is the closing bell. Wednesday closing watch. This is going to be in the Market Watch meetups room, which is here. Market Watch meetups right here. You would just jump into this room, find who's there, and have a chat. I'm trying to get Gary and Glenn to start attending some things. That's the next thing we're going to work on to get more instructor presence in chat and meetups and stuff. So look, we're gonna keep trying. So if you show up and no one's there, you're like, keep showing up. I'm gonna get it. We're gonna make it happen. Then tomorrow we'll have a chat-based opening bell. No cameras, no screen sharing, just chatting it up for the first hour of the market. That's tomorrow morning. And then tomorrow night we have option Greeks. So plenty of things in front of us. All right. It's good to see you guys. Have a great rest of your day. See you soon. As always, happy trading.